Hey everyone, welcome back. Today we're going to try to get to the bottom of something pretty interesting. We're diving into all this talk about a stock market crash. And we're trying to figure out, is it just all this election year hype? Or is there something like more strategic going on?
Right.
You send over some really interesting stuff for this deep dive. There's that video by Graham Stiffen and then that huge financial analysis document.
Yeah.
So are we like stepping into some wild conspiracy theory here?
Oh, yeah.
Or is there like a really clever political strategy unfolding? Buckle up because we're about to find out.
Well, the markets have been kind of acting a little bit jumpy lately.
Yeah.
We've seen the S&P 500, the Dow Jones, even the NASDAQ, which is usually, the tech-heavy one. They've all taken a bit of a dip recently.
Yeah.
And, of course, this is all happening while, Trump's out there making these pronouncements about a crash if he doesn't get reelected.
Yeah, and he hasn't exactly been quiet about it, has he? I mean, some of those warnings have been pretty vague.
Right.
And then others are just straight up saying the economy is going to tank if Biden gets in.
Yes.
So how do we even start unpacking all of this?
Well, we really have to think about the psychology that's at play here, right?
Yeah.
I mean, investors are always trying to, get a glimpse into the future, predict what's going to happen next. And so when someone like Trump, with his background in business and this huge political platform starts talking about a crash, it's going to get people's attention.
Right. It's kind of like that feeling you get when somebody whispers fire in a crowded theater.
Exactly, yeah.
Even if there's no real danger, that suggestion is enough to trigger a panic.
Yeah, that's a great analogy.
Yeah.
And Graham Stephen, in his video, he suggested that maybe Trump is actually doing this on purpose, like almost creating a narrative where he's the only one who can save the market,
Right.
And that kind of plays into a very powerful motivator.
Yeah.
People are afraid of losing their money, their hard-earned savings.
Absolutely. So let's say some investors do buy into that narrative, right?
Yeah.
They get spooked and they start selling off their stocks. What happens next?
Well, when a lot of people start selling all at the same time, prices are going to drop.
Right.
And then those falling prices are just going to spook even more investors, which leads to an even bigger sell-off. And then it kind of becomes this self-fulfilling prophecy.
Wow.
The fear of the crash actually contributes to the crash itself.
That's kind of scary.
Yeah.
But wait a minute, haven't we seen this movie before?
Maybe.
Didn't Trump make very similar pronouncements about the market tanking if Hillary Clinton won back in 2016?
He did. He did. And you know what happened?
What?
The market actually surged after he got elected.
Really?
A lot of analysts were completely caught off guard.
Yeah.
And then, fast forward to 2020, he was predicting doom and gloom if Biden got elected. But the market remained pretty stable throughout the whole pandemic.
Yeah.
And then it actually went on to hit record highs.
Wow.
Yeah.
So are we seeing a pattern here? It seems like historically, markets maybe get a little jittery before an election.
Yeah.
But then they tend to calm down once the results are in. So does that mean that maybe all this talk is just, all bark and no bite?
Well, not necessarily.
Yeah.
Markets are incredibly complex, and they're influenced by all sorts of things. And very rarely is there just one single cause for why they move the way they do. So just because we've seen certain patterns in the past doesn't guarantee they'll always repeat themselves.
Okay, so you're saying this time could be different.
It's definitely possible.
Yeah.
One thing that makes this situation unique is just the sheer volume and the intensity of his rhetoric, right? He's not just talking about the market in isolation.
Mm-hmm.
He's weaving it into this larger narrative about, America declining under the current administration. And that kind of messaging can be very powerful, especially for people who are already feeling anxious about, their jobs or their savings.
Right.
So it really taps into those existing anxieties.
And, Stefan, in his video, he really highlighted that.
Yeah.
He pointed to one specific example where Trump said, that the stock market would crash if Biden was elected and people would be jumping out of windows.
Yeah, that's pretty intense.
It's pretty graphic imagery, right?
Yeah.
I mean, that's going to stick with some people.
Absolutely. And that's what we call FUD, right? Fear, uncertainty, and doubt.
Mm-hmm.
It's this very potent tool that can manipulate people's emotions and behavior.
Mm-hmm.
And it's especially powerful when we're talking about people's money, right?
Mm-hmm.
Even if those claims, even if they're exaggerated or not based on solid evidence, the mere suggestion of a crash can be enough to trigger that panic selling that we were talking about.
So we've got this FUD factor swirling around. It seems like even just having a reasonable conversation about, you know, the possibility of a crash could be contributing to the problem.
Yeah.
But let's be honest. There are some people out there who actually benefit when the market goes haywire.
Right. Oh, absolutely. You've got your hedge funds, your short sellers. These are the folks who actually make a lot of money when the market goes down.
Mm-hmm.
They're essentially betting on things going bad.
Mm-hmm.
And then you also have your political strategists who might see a weakened economy as,
Right.
a way to attack their opponents. If voters are feeling financially insecure, they're more likely to blame the incumbent party.
It's like this cynical game of chicken where everyone's trying to, win, even if it means the economy takes a hit in the process.
Yeah.
But here's a question. If Trump really wanted to crash the market, I mean, wouldn't he need some help? He's not the only one who has influence over the economy, right?
Oh, absolutely not. He's definitely not operating in a vacuum.
Mm-hmm.
I mean, there are a lot of powerful forces at play here.
Mm-hmm.
You've got the Federal Reserve, which is the one that sets interest rates. And then, let's not forget about the media. They play a huge role in shaping public perception.
Oh, yeah.
And, sensational headlines about an impending market crash, those can really amplify those fears and uncertainties that we were talking about earlier.
It's almost like the media is holding up this giant megaphone to the market, broadcasting every little blip and dip to the whole world.
Right.
No wonder people are freaking out.
Yeah, it's a lot to take in.
It is.
And, it's not just politicians and hedge fund managers who are watching all of this unfold. There are millions of everyday people out there who are worried about their savings, their retirements,
Yeah.
Their kids' college funds.
Absolutely. And that's why we're having this conversation.
Right.
We need to cut through all of that noise and try to figure out what's really going on. Is this just political posturing?
Right.
Or is there a genuine risk of a market crash?
Right.
And if so, what can people do to protect themselves?
Yeah.
Big questions.
Yeah. So, before the break, we were talking about how the media can sometimes make all this market fear and uncertainty even worse.
Yeah, it's like they can turn a little ripple into a tsunami.
Exactly. And that brings us to a really important skill that any investor needs to have these days, critical thinking.
Yeah, with so much information out there, how do we even know what to believe anymore? I mean, how do we sort through all the noise and figure out what's actually real, what's actually reliable?
You're right. It's not easy, but it starts with understanding that the media landscape is kind of like this giant buffet. You've got your main courses, your side dishes, your desserts, even some questionable leftovers in the back,
Okay, I like this analogy. So where do we start filling up our plates? I mean, what are the main courses when it comes to financial news?
Well, I'd say the main courses are those really reputable financial publications and news outlets.
Yeah.
Like the Wall Street Journal, the Financial Times, Bloomberg, Reuters.
Okay, solid choices.
Yeah, they've got a long track record of good journalism. And they tend to rely on,
Yeah.
Actual reporting data analysis, not just hype.
Got it. So those are the solid, reliable sources. What about the side dishes? How do those fit in?
The side dishes would be more like the specialized financial websites, blogs, podcasts, things like that.
Okay.
Those could be great for going deeper into specific topics or investment strategies, but you have to be a little bit more careful with those. Look for sources that are upfront about how they get their information, they cite their sources, and they're not making these crazy promises or guarantees.
So it's like checking their credentials before you take a bite.
Exactly.
Makes sense.
Right.
But what about those tempting desserts? The ones that are all flashy and promise you'll get rich quick?
Oh, yes. The financial clickbait.
Mm-hmm.
You'll find that all over social media, YouTube, some of the less trustworthy financial websites. And those are often just stories that are designed to get you to click, not really to give you good advice.
It's like those ads you see that promise to make you a millionaire by trading penny stocks.
Right? Exactly. If it sounds too good to be true, it probably is.
Buyer beware.
Exactly. But here's the thing. Even when you're reading or watching news from those reliable sources, it's important to remember that every story has a perspective, an angle,
So even the main courses can have a little bit of seasoning.
Precisely. And that's where critical thinking is so important. You need to be aware of potential biases, both from the source itself and from your own personal biases.
Okay, so time out for a definition here. When we talk about bias, we're talking about like a tendency to favor a particular viewpoint or outcome, right?
Frankly. And bias can show up in really subtle ways. Like a news outlet might have a certain political leaning that influences how they report on economic issues, or they might rely too much on experts or analysts who share their viewpoint.
So how do we spot those biases? What are some red flags we should watch out for?
Well, one thing to look for is language that's really emotional or uses charged words to try to get a reaction out of you. For example, words like crash, collapse, or meltdown can create a sense of panic, even if the data doesn't really support that level of alarm.
Okay, so watch out for the drama queens of financial news.
Right, what else?
Yeah, what else?
Pay attention to who they're citing as sources. Are they using credible experts, or are they quoting anonymous sources or cherry-picking data to fit a story they've already decided on?
So it's like checking the footnotes in a research paper. You want to see where they got their information.
Exactly. And don't be afraid to fact-check. If something sounds too good to be true or too bad to be possible, do your own research and see if it holds up.
All right, so we've talked about spotting bias from the source itself. What about our own biases? How do those affect how we see things?
That's a great point. We all have our own beliefs and experiences that shape how we see the world. And those beliefs can influence how we interpret information, even when we think we're being totally objective.
So how do we get past our own blind spots?
Well, it starts with self-awareness. Take some time to think about your own beliefs, about the economy, about politics, about investing. Where do those beliefs come from? Are they based on evidence or personal experience? Are they coloring how you're reading the news?
Okay, step one, a little introspection. Get to know your own inner financial guru or maybe your inner financial skeptic. What's next?
Next, I would say expose yourself to a variety of viewpoints. Don't just read news that confirms what you already think. Seek out information from sources that challenge your assumptions and make you think critically.
So expand your media palette.
Yeah.
Don't be afraid to try new flavors, even if they seem a little strange at first.
Exactly.
Yeah.
The more perspectives you're exposed to, the better your understanding of the situation will be, and the better prepared you'll be to make good financial decisions.
This is all great advice, but I'm thinking about those people who are listening right now and they're feeling really anxious about all of this. What are some things they can do right now to manage that anxiety and protect their investments?
That's a natural reaction when you're feeling uncertain or scared. But I always say, focus on the things you can't control. You can't control the market, you can't control what politicians are saying, and you definitely can't control the media, but you can control your own actions.
So take a deep breath and focus on what you can actually do, something you have influence over. What kinds of actions are we talking about?
Well, we've already talked about having a diversified portfolio and a long-term investment strategy. So this is essential for weathering those market storms. But there are other things you can do too.
Like what?
For example, you can look at your budget and make sure you're living within your means. That'll give you a sense of financial security, even if the market is going crazy.
Okay, so financial stability starts at home. Makes sense. What else?
You can also build up your emergency fund. Having some cash on hand will help you sleep better at night, knowing that you can handle unexpected expenses without having to sell off your investments at a loss.
So it's like having a financial safety net for when things get really rough. I like it. Any other tips?
Well, if you're feeling really overwhelmed, don't hesitate to reach out for professional guidance. Talk to a financial advisor who can help you put together a plan that fits your goals and your risk tolerance.
That's a great point. Sometimes it really helps to have someone objective to talk through your worries and help you stay rational.
Absolutely.
There's another piece of this that we haven't really discussed, and I think it's something a lot of people are thinking about right now.
Oh, and what's up?
The ethical side of all of this. If someone is intentionally trying to manipulate the market for their own political gain, isn't that kind of wrong?
That is a really complex question.
Uh-huh.
And it's one that philosophers and ethicists have been debating for ages. There are different schools of thought on what's considered ethical behavior, especially when it comes to finance and economics.
So no easy answer. No
Yeah.
black and white.
Not really. It often depends on your perspective and how you interpret things. Some people believe that any kind of market manipulation is unethical, no matter what the intention or the outcome is.
Yeah.
But others say it's more complicated than that, and it depends on the specific situation.
Okay, so it's not a simple issue, but I think it's something we should at least acknowledge. We're not just talking about numbers and charts here. We're talking about people's lives, their jobs, their futures.
You're absolutely right.
Yeah.
And I think it's crucial to remember that financial decisions don't exist in a bubble. They have real-world consequences for individuals, families, entire communities.
So as we try to make sense of all of this politics, finance the media, we need to do it with a sense of responsibility.
Exactly.
Hmm.
We need to be aware of how our choices might impact not just our own wallets, but also the well-being of others.
Well said. So we've talked about the importance of critical thinking, the need to diversify our investments and manage our emotions, and these ethical questions that come up when we talk about market manipulation. Where do we go from here?
I think it's time to shift our focus from the small picture to the big picture. We've been focusing on individual investors and their decisions, but I want to talk about the global economy and all the forces that shape it.
Okay, sounds good. But I have to admit, I'm a little intimidated by the big picture stuff. It can feel so abstract and overwhelming.
I understand. But I think it's important to at least have a basic understanding of how the global economy works. Because what happens on the world stage can affect your own investments, even if you're only investing in companies here at home.
So it's all connected.
Absolutely.
Yeah.
We live in a globally interconnected world, and what happens in one country can have a huge impact on others, both economically and politically.
Okay, I'm starting to see the bigger picture here, but where do we even begin? What are the most important things to understand about how the global economy works?
Well, I think it's helpful to think of the global economy as this massive ecosystem. It has different players, different relationships, different forces that are always interacting and influencing each other.
Okay, like a giant complex web. What are some of the key players in this web?
Well, you've got countries, of course, each with their own economic systems and policies. Then you've got multinational corporations that operate in multiple countries and have a huge impact on global trade and investment. And then there are these international organizations like the World Bank and the International Monetary Fund that try to keep things stable and encourage cooperation between nations.
And then you have the financial markets, which are like the nervous system of this whole global economy transmitting information and money at lightning speed.
Exactly. And all of these players are linked in complicated ways. Like a change in interest rates by the Federal Reserve here in the U.S. can impact currencies and stock markets on the other side of the world.
Wow, so it's like that butterfly effect thing. A butterfly flaps its wings in one part of the world and it causes a hurricane somewhere else.
That's a great analogy, and it's a real thing. Small changes in one part of a complex system can have huge, unpredictable consequences in other parts of the system.
Okay, so the global economy is interconnected, complex, constantly changing.
Yeah.
How are we supposed to make sense of all of this?
Well, I think it starts with staying informed. Read the news from trustworthy sources, follow experts on social media, listen to podcasts like this one. The more you learn about the global economy, the better you'll understand how it affects your own investments.
That makes sense. But with so much information out there, how do we know what to focus on? What are some of the big things we should be watching?
Well, there are lots of things that can influence the global economy. But here are a few key ones to keep in mind. Economic growth. That's a measure of how much a country's economy is growing or shrinking. Strong economic growth is usually good for the stock market, while weak growth can lead to declines. Then there's inflation, which is basically how fast prices are rising. A little bit of inflation is okay, but if it gets too high, it can hurt people's buying power and corporate profits. Then you've got interest rates, which are set by central banks and can have a big impact on how much it costs for businesses and people to borrow money. Low interest rates can help the economy grow, but they can also lead to inflation. And then there are currency exchange rates, which tell you how much one currency is worth compared to another. Fluctuations in exchange rates can affect how profitable companies are if they do business in other countries. And finally, you have to consider geopolitical events, things like wars, political instability, natural disasters. Those can all have a significant impact on the global economy.
Okay, so those are some of the big factors to keep an eye on. But how do we know what they mean for us? I mean, if inflation is rising in Europe, for example, what does that mean for my investments?
That's a great question, and it's one that takes some careful thought and analysis. There's no easy answer, because the impact of any one factor depends on a bunch of other factors.
So it's not just about knowing the facts, it's about understanding the context and how different things are related.
Exactly, and that's where a good understanding of economics and finance can really help you. It allows you to connect the dots and see the bigger picture.
Okay, so we need to stay informed, keep learning, develop our critical thinking skills, and have a solid understanding of how economics works. Any other tips for navigating the global economy?
One thing I always recommend is to diversify your investments geographically. Don't put all your eggs in one basket, so to speak. Invest in companies and assets from different countries and regions to spread out your risk.
So if one part of the world is having a tough time, your investments in other parts of the world might help balance things out.
Exactly. And there are lots of ways to diversify geographically. You can invest in international mutual funds or ETFs. You can buy stocks of companies in other countries directly. You could even invest in real estate or other assets in other countries.
Okay, so diversification is key, both in terms of different types of investments and in terms of geography. but I'm still feeling a bit overwhelmed by all of this. Is there any way to simplify it?
Well, one thing to remember is that the global economy is always evolving. There's always something new to learn, something new to adapt to. So don't try to figure it all out at once. Just focus on building a strong base of knowledge and skills, and then keep learning and adapting as you go.
That's good advice. It's like learning a new language. You don't have to become fluent overnight. You start with the basics and go from there.
Exactly. And remember, you don't have to do it alone. There are tons of resources out there to help you learn about the global economy and how to invest in it. Read books, articles, websites, listen to podcasts like this one, talk to financial advisors. And most importantly, stay curious.
Okay, so stay informed, stay diversified, stay curious. I think I can handle that. But before we move on from this part of our deep dive, I want to circle back to something we talked about earlier, the ethical implications of investing.
Ah, yes. That's an important topic. And it's becoming more and more relevant as people are becoming more aware of how their investments can affect the world.
Exactly. I mean, for a long time, investing was seen as just a financial decision. You pick stocks or funds based on how much money you thought they would make. But now people are starting to realize that their investments can have social and environmental impacts too.
You're absolutely right. And that's why we're seeing the rise of what's called ethical investing or sustainable investing. It's the idea that you can invest in companies that are doing good things in the world and still make money.
Okay, I'm interested. Tell me more about ethical investing. How does it work?
Well, there are lots of different approaches to ethical investing, but they all have the same goal to invest in companies that are making a positive impact.
So instead of just looking at profits, you're also looking at things like a company's environmental record, their social impact, how they treat their employees.
Exactly. And there are lots of ways to find ethical companies. For example, you can avoid investing in companies that are involved in things like fossil fuels, weapons, or tobacco. You can look for companies that are promoting renewable energy, fair labor practices, or sustainable agriculture. You can even invest in companies that are specifically trying to address issues like poverty inequality or climate change.
Wow, that's incredible. It sounds like ethical investing is a way to use your money to actually make a difference in the world.
It really is. And it's getting more popular all the time. More and more investors are realizing that they don't have to choose between making money and doing what's right. They can do both.
Okay, so we talked about a lot in this part of our deep dive, the global economy, the importance of diversification, and this whole idea of ethical investing. Any final thoughts before we wrap things up?
Just as investing is a journey, not a destination. It's about learning, adapting, and making smart choices that align with your goals and your values. So stay curious, stay engaged, and enjoy the ride.
Great advice. And with that, let's move on to the final part of our deep dive, where we'll explore.
Okay, so we're back. And, we've covered so much ground in this deep dive. Everything from, Trump's predictions about the market to how to, read the news and not get, totally freaked out.
Right.
We've even talked about, that whole world of ethical investing. But I feel like there's still, this one really big question that everyone's probably thinking about.
I think I know what you're going to say. It's the question, right?
Yeah.
Is the market actually going to crash?
Yes, exactly. I mean, is there any way to know for sure after looking at all these different things, all these different factors? I mean, can we predict what's going to happen?
Honestly, if anybody tells you they can predict the market with 100% certainty, they're probably trying to sell you something.
The truth is, markets are so complex. There are just a ton of different things that can influence them. Some of them we can kind of predict, some of them, totally out of the blue.
Right.
So it's not as easy as just looking at, let's say, Trump's speeches or interest rates and being like, yep, there it is, crash is coming.
Right.
Think of it more like a giant puzzle, but the pieces are constantly shifting, and some pieces are missing, and then new pieces just appear out of nowhere.
Oh, that's a good way to put it.
Yeah, you can look at those historical trends, you can look at the economic numbers right now, and you could even, try to factor in the whole psychology piece that we've talked about. But at the end of the day, there's always going to be some uncertainty.
Okay, so then what's the point of even trying to, figure it all out? Should we just, throw our hands up and just invest based on our gut feeling?
No, not at all. I mean, the point isn't about predicting the future perfectly. It's about becoming, smarter and more resilient as investors. The more we can understand about those forces that are shaping the market, the better we're going to be at making those, rational decisions, at managing risk, and at just riding out those ups and downs that always happen.
Okay, that makes a lot of sense. So it's not about avoiding risk. It's about, understanding it and mitigating it.
Exactly.
But let's get practical for a second. Like, what can people listening right now do to protect themselves no matter what happens in the market?
That's a great question. And I think it comes back to something we've talked about a few times already, diversification.
Right.
Make sure your portfolio isn't too heavily invested in any one thing, like one type of asset or one industry or even just one part of the world.
Right, right.
So, somebody listening right now might want to take a look at their 401k and see, okay, are things balanced? Or maybe it's time to finally look into those index funds everybody's been talking about. Exactly. And don't forget about those other types of investments we talked about, like real estate or precious metals. Those can sometimes act as a kind of buffer when the market's going crazy.
Okay, so diversification. But what about, the whole emotional side of things? How do we avoid making those like impulsive decisions based on fear or, maybe getting a little too greedy?
That's where having that long-term plan, that long-term investment strategy really comes in handy. When you have a plan that makes sense for you, a plan that aligns with your goals and how much risk you're comfortable with, you're less likely to just react emotionally when the market jumps around.
It's like having that roadmap for your money, right? You might hit some detours or some unexpected stuff might happen, but you keep your eye on that final destination and eventually you're gonna get there.
Exactly. And, remember, you don't have to go through this alone. A financial advisor can be really helpful. They can give you advice, they can support you, and they can be that, voice of reason when things get a little crazy.
So diversify, make a plan, and ask for help if you need it. That's good advice. But there's one more thing that keeps popping into my head as we've been doing this deep
I
dive.
think you're going to bring up those ethical considerations again.
You know me too well. We talked about ethical investing, right? But what about the ethics of all this market talk in the first place? I mean, is there a line between, politicians just saying what they think and like actually using fear to influence how people handle their money?
That's a really tough one. And I don't think there's an easy answer. But I do think it's a really important conversation to have. We have to think about the impact of what we say, especially when what we say could affect people's financial lives.
Right, because at the end of the day, the market isn't just about, numbers going up and down on a screen. It's about people's lives, their hopes and dreams, their plans for the future.
Absolutely. And that's why it's so important to think about investing in a responsible way, not just for ourselves, but for everyone.
So well said. Well, I think that about wraps up this episode of The Deep Dive.
It's been great talking with you.
You too. And to everyone listening out there, we hope this deep dive has given you some like real actionable stuff to think about, to help you make sense of the world of politics and money and investing. Remember, knowledge is power, and thinking critically is the best way to protect yourself from, all that manipulation and fear-mongering that's out there.
And never stop learning. Things are always changing in the financial world, so stay curious, stay engaged, and keep on digging deeper.
That's great advice. Until next time, stay informed and thanks